Yeah. All right, there. So what's up, YouTube? All right, yeah, you guys just heard I was on the phone with one of the subscribers, followers, actually one of the traders that I talk to on a daily basis. So we're just trying to figure this out because for some reason it's actually delayed. But whatever, we got it up. So I'm gonna go in alphabetical order with the different tickers. So we'll start off with Apple. We'll run through, I think it's about 10 different tickers that we have over here. There's 3, 4, 5, 6, 7. Yeah, so we'll just say it's around 10. All right, and then I'm going to go back in and look at the comments, and I'll try to see if I can get some more for you. But we'll try to make this as quick and as smooth and as easy as possible. All right, so with Apple. Now we're going to look at, obviously, Apple, Tesla, like all of these things had a really good push on Friday. Of course, that's with the big stimulus proposal that just came out from Biden. You know, it was like a couple trillion or something like that. But either way, so let's see what Apple is going to be doing, what it has been doing. We'll take a look at a few different charts here. So it did pop up early morning with the rest of the market, and then it just kind of came back. And you guys know that I love playing the gap fills. So that's exactly what happened. It gapped up first thing in the morning pre-market, and then it just came back to fill the gap. Now, if you guys were watching it pre-market, you did notice these two candles. They weren't really gap fills. Normally, what happens is the last price for the bid and the last price for the ask. Once those two have like a massive gap in there, or like a huge spread, then the ticker will just appear to be a massive, like just a huge long stick like you see right here. So let's go back into a 5-minute chart and see if we can pull that up. Yeah, so you see that happened a couple times in pre-market, because you also got to remember the volume is much lower than it is during regular market hours. Like you see here, 2 million, then you come back here and you see 25,000. You see over here 29,000, and again over here 44,000. So it's really not a lot of volume, especially for Apple, something that trades millions of shares in a minute. So it did come back, it filled the gap. Now there was a lot of good news that came out with Apple and Tesla. Supposedly they're going to be not working together, but Apple is going to be buying some software from Tesla in regards to their battery and how they make it. So that was one of the catalysts that actually gave it a huge boost in the morning pre-market. But if you steer away from the news and you just look at chart analysis, you'll see that Apple did come back down. It tested a massive support level that I have right here at the 119.77 level. It did test it a couple times. It broke through, but it managed to hold. Now there was a gap to fill down below, but it's been so hard for Apple to actually come down to those levels. There's a lot of support for Apple. There's a lot of buyers. So I'm not surprised that it didn't actually come back down to fill that level. So now it's back up. It's going to be in a new trading range. So you'll see here, it's got several times where it's come up to about the 123, 124 level, and it just doesn't have enough energy to clear. So I'd look for that next week to see that maybe if it does continue to stay above the 20-day moving average, the 50 hasn't crossed over to 200 yet. So you would want to see that. If it doesn't, then you can expect it to actually break through the 20-day moving average. So if it does open up on Monday below 122.84, or I just say below 123, then it's possible it can retrace down to the 122 level. You can see over here it has had some resistance, so you may want to look for it as support. It was resistance here, resistance here, here, and then finally it had support. So you would want to see that it does come down and retest that. If it does hold, then it's possible it could just be a new level of consolidation and push back up. If it does stay above the 20-day moving average, then I'd look for way more upside. Hopefully it can retest the 124 level, possibly break through it. But I would definitely look for resistance at the 124 level. All right, so keep that in mind if you guys are going to be trading Apple. All right, next we will look at CCIV, which is a huge favorite of a lot of people that message me on Instagram. I mean, it's no surprise. EV was huge last year, and they do have a pretty impressive lineup of cars that are going to be coming out. And to be honest, I was a massive hater on CCIV, on Lucid, but after doing a lot more research, I'm a hater turned fan. So I do like CCIV. I'm not, as you can see, I'm not currently holding any position in CCIV for a long-term trade. I am looking for it to clear this trading range. Once it clears this, it moves above the 25.15 level, then I would see some more strength going forward. So for next week, what I would do, well, let's just see what happened yesterday, just like the rest of the market. Well, remember, CCIV, being that it's in the EV sector, is going to follow Tesla. You know, it's going to do what Daddy does. So when Tesla's pushing up, you'll see that everything else in the EV market is pushing up. So it's fair to say that I would look for Tesla, how it's reacting to the market, and then I can kind of make an assumption, or at least a calculated assumption, on what CCIV would be doing next. Now you'll see here that it does have a lot of resistance right at that $24 level. So that's a new level to watch. On the 20-day, you can see the trading range goes up to 25. So it's held really strong at the 20. It's got a lot of support at the $20 level. So it's not breaking down. And if it does, of course, then you've got 1881 as the lowest level I see CCIV going. Now, the reason why obviously I see this company still pushing up in the future, there is a massive gap above that needs to get filled. This is going to be between 43.94 and 56.08. So it's still going to be some time before we actually get back to these levels, unless there's some kind of insane catalyst that comes out and just pushes it up. Or if Wall Street Bets wants to get in on this, then that will also push it up. So aside from that, you could look for a massive amount of resistance at 25, and then the next level would be 30, and then the next would be 35. So it's pretty simple with CCIV, but also keep in mind the moving averages. This was my favorite play when the 20-day comes down below the 50, which is below the 200. So it did that, and it bounced off of its level of 21.41 a couple times here. Broke through a little bit, but then it still held support. So it did start running back up. It got rejected on the 50-day, but it came back, broke through, held the 20, broke through both, and now it's above the 200, which is great. But you'll see the pattern repeat itself here. This is awesome because you do have the same pattern repeating, plus now the market is out of March Madness. So when you have confirmation here of the support level, comes back, confirms again, breaks through the 20-day, breaks through the 50-day, heads up towards the 25, then this is just going to keep climbing. So that's what we're going to look for on Monday. We want to see it break above this 20. It's already been rejected once, got rejected twice. So over here, we want to see that it does open up on Monday above the 24 level or above the 50-day moving average. If it does, you will look for resistance at the 25.15 level, or we could just say 25 to keep it simple. And if it does break through here, look for the next level of resistance at 26.41, or I guess we could say, yeah, the 26.15. All right, so look for 26 to 26.15 as the next level of resistance. So what I would think is going to happen, if you're looking at the 6-month, 4-hour chart, then look for a trading range between 26.40 and 25.20. So you do want to see it break above this and then trade between here for a little while. It'll consolidate and then hopefully move up more. Unless, of course, some more negative news comes out, then you could look for some further downside, but I really don't see it coming back down below the 21.41 level. All right. Next on the list is CEMI. This one ripped on on Thursday. You know, I hate when they have these days off. I get so confused with my days and the weekends, and it's just strange. Let's see what you guys are saying. All right, let me see. We're gonna add another one to the list here. That one doesn't come up. So we'll just focus on CEMI right now. CEMI. Let's see what it's doing. On Thursday, you can see on the 4-hour chart, it did break through the 200-day moving average. It had a massive catalyst, though. It had some kind of news about the commercial launch of diagnostic tool to differentiate COVID-19 and the flu. All right, so that is pretty good. I think we need that, especially in Canada. You could fart in public, and all of a sudden, they're going to think you have COVID. So I think this is a pretty good tool. But let's look at some levels. So as you can see, it came all the way up to 555. Let's see if we can draw out some levels here to see why it stalled there. All right, so there was a previous level of support if you're looking at the 4-hour chart. So it was resistance and it broke through. Not the best support. Broke through, resistance. So it's actually been more of resistance. Then it finally turned into support. Then support, then resistance. So it's going to have some trouble breaking above this level. If you look back a little further, let's see if it had some higher highs. Yeah, and it did. And there was a huge gap. So you can see this gap got filled, but I mean, this was a long time back. This is back from June 4th, 2020. And it finally got filled. Almost got filled here, December, and then it finally got filled here, and then there was another gap up here, but this one's a really small gap. I'm not too sure if this one's gonna get filled, but either way, at least the main gap, this did end up getting filled. So it's possible it could still run up. If it does, I would look for heavy resistance around the $8 level. Most likely pre-market, it may hit that. So if you're holding this stock, yeah, you can see it did. Yeah, it's gonna have some real trouble. Actually, you know what? If you got in on Thursday, come Monday morning, I'm pretty sure pre-market it will gap up. If it does gap up, then you're gonna want to make sure that it at least holds this level of support. If it does not, then you could look for some massive downside, because this one rips, but then you can see once it climbs, it tanks really hard. And even though this one was a more choppy and a bit longer decline, it's still a massive drop. So if you're holding the stock, I would be careful. Look for support at the $5 level, but if it does break above here, you'd want it to hold depending on how high it goes. The next level of resistance would be 693, or actually no, right here, 642. So I'd look for 642 as a possible exit. Of course, if you want to be risky and run it higher, you can. That's up to you. But for me, I'd rather just play levels. Look for a comeback. Look for support. So you'd want it to stay above 564, or at least retest that level and then start making higher highs. If it does break below that, then look for $5 as the next level of support. Where else can we look? If we're looking at the 20-day, yeah, even at the 20-day, it hasn't really hit these kind of highs. So Monday morning, if it stays above, yeah, $5. I guess it's going to be whole numbers with this one, since it doesn't trade in this range way too often. So I definitely look for some support here at the 5, and then just trade it between 5 and 564 and see if it does break above that. All right, but be careful with this one. It's a new runner. It's biotech, and everybody knows biotech runs and it rips. And when it rips, it can pull back hard because they will usually try to do an offering. And even though a lot of times they have to put out their statements first before they do that, with biotech companies, they just happen to do it a lot faster. They'll do it much sooner than other companies would do in different sectors. All right, so let's look at CORG. Oh wow! All right, so this is a low cap. These ones I don't really like, just because low caps are really scary. They don't trade in a normal pattern. But okay, you know what? We'll look at it since it was called out. If it does not hold above the 20-day moving average, which even over here, this is at 79. So if it opens up on Monday, you would probably want to look for some resistance around the 90 cents. If it can make it up to $1, that's great, but I'd definitely say 90 cents is going to be a level to watch out for. If it cannot break above that, 78 would be support. The next level of support below that would be 61. Actually, you know what? I'd say 66, because by the time Monday comes around, the 50-day moving average would be around the 66 cents level. So look for some support over there. If it does break below the, if it doesn't hold above the 20-day moving average, that's what I would look for. But then again, it's also based on volume. Let's see if there was any kind of news catalyst that's pushing this. According to expand cryptocurrency initiatives. Okay, so if they're going to be now, obviously, crypto is becoming adopted everywhere. There's a lot of talk about regulations and government trying to put, trying to regulate it and probably stop it or make it illegal, but that's not going to happen. Especially when you have all these massive corporations that are adopting payments for crypto. Doesn't necessarily have to be Bitcoin, could be Ethereum, could be Ripple, could be Dogecoin pretty soon. I'm actually learning a lot more about crypto now. Funny enough, I'm actually learning it from my brother, who's been trading this stuff for a while. So I'm definitely going to get some more information from him. Who knows, maybe I'll bring him on the channel so he could talk about it. But he's doing really good with crypto, so I'm definitely going to find out some more information on it and get into it myself. Because for me, for the longest time, it was just the hardest thing to understand. But a lot of places, a lot of companies are adopting it, so there's no way that it's going to be banned. If you heard any news about that, then I would just disregard it. But yeah, so for Coria, if it is going to be entering the crypto space, that could be a huge catalyst. And I wouldn't really see, if it is legit, then I wouldn't see it falling below 66 cents. I'd want it to hold that level, or 65 cents. So see on Monday, if it does hold this level, you don't want it to drop below the 50. If it drops below the 50, then you're going to look for some support around 51 or 50 cents. Then of course you can see here 45. What you want to see is exactly what you see here. It goes up, it consolidates. All right, it's like building stair steps. It goes up a little bit more, it consolidates. Goes up more, comes back, consolidates. Goes up more. So you can see over here, it did kind of peak out and then start turning down. So now you kind of want to see it start consolidating at a higher level. You always want to make sure stocks are making higher lows every time it starts moving up. If it's not making higher lows, like what's happening here, where it actually just pulled back big, now you want to see a level of consolidation, but you want it to keep a certain line. So I'd say, if I could extend this out a little further, yeah, I guess you know what, you just want to see to make sure that it does not break below this line. So I'm just going to keep this, and I'm going to keep a watch on it for next week to make sure that it does not break through that line on the on the daily chart. Let's look at it on the 20. Okay, so it's got a long way to go before it actually falls down here. So 50 cents would be a level I'd look for as the low. If it breaks below that, just get out. But I really don't like trading penny stocks. It's just way too risky. It's hard to read. So let's go on to NIO. This one obviously had a massive day. Now they had a really good sales report. So they show that they sold a lot more cars than was expected. They did peak out at 42.30 and then pull back a bit. But it's good because, one, the pattern was in play on the 20-day chart. So it did come back here. It retested a low all the way from March 8th. So from here, you can see it tested it, almost tested it once here. Tested it once, twice, started consolidating. The lines were in favor. You got the 20-day below the 50, below the 200. And if it's consolidating here and you have these lines, then you know that it's going to rip. Well, you don't know that it's going to rip, but the chances are in your favor that it's going to rip. Plus, on top of that, you had good catalysts for it in terms of their sales. So that was a huge push for them. And you can see once they broke through the 20, they ripped through the 50, and they just kept on climbing, and it kept using the 20-day as support. So now they did break above the 200. They came back, they tested it, and now they're kind of below it. So what I would look for on Monday is there is a small gap to fill here down at the $38.96 level. We'll just say $39. So right now it's at $39.50. It's not a huge drop, and I wouldn't be surprised if it actually comes down to test the 50-day. You can see here that there was a level of resistance, which you would want to see another test for support. So I would probably look for an entry around the $38 level. I know it does seem like it's a pretty big drop, but when you see something that runs up this big, you would want to see a little bit of a pullback and consolidate. So if it does come down to the 39 level, that would be good, because you can see some resistance here, then it came through, broke above, came back, broke above. So maybe 39 would be an awesome entry. This way, the 50-day moving average would be around that level 2 come Monday morning. So I'd look for an entry around there. And you want to see, of course, that it does hold that. If it does drop below the 50-day moving average, then more than likely you'll see it come down and test 38. I don't see it dropping any lower than 38 based on the good news that has been coming out. And plus, once again, we are out of March Madness. And everybody knows March is notorious. February and March is pretty notorious for a pullback. Like in the whole year, it'll run up. But then you have to have, it's kind of like retail or even sales or any companies that you're looking at outside of just the stock market. You'll see that they do slow down because Christmas, the holidays, and the weather. So now everything is starting to pick back up. So I'm pretty sure this is going to run up with it. Peloton. You know, in a lot of these companies, if you're looking at the 20-day moving average, the 20-day chart or the 1-hour chart, you can see this pattern is in play, which is, once again, just my favorite patterns to play. And of course, it has a retest here. It did break through this level of pretty good support. Bounced here, bounced here, bounced here, bounced here, bounced here. So it was only a matter of time before it finally breaks above. And it did. And it broke up huge. So, and Peloton is, you got places that are still in lockdown. You got gyms that are still not reopened. So a lot of these stay-at-home stocks did have a massive pullback this year, but it was also because of expectations of the entire world just reopening and everything going back to normal. But we can see that it's not like that, especially in Canada. None of these gyms are going to be open, at least not for a good while. So Peloton, they do have an awesome, a pretty awesome system. I've used it myself. I'm pretty fond of it. But I'm sure that they are still going to be running up because the gyms are not open yet. So I'd still hold it for a little while, but I'd probably say 120 is going to be a massive level of resistance because some places are starting to reopen. And if they are reopening, people are going to want to get outside. People aren't going to just want to stay at home and just use a Peloton. The weather is getting better. So even if the gyms aren't open, people are going to start cycling outside. I'm looking for another bike myself. So I would look for a little bit of a run-up. At max, you can say 120. But also, if you zoom in here, you'll see that they finally broke back down below the 20-day moving average. So you can look for some support around 110. Actually, you would want to look for some support around 110. But one thing to look for here, now that the 50-day and the 20-day are both above the 200-day moving average, you can expect the 20-day to start pointing downwards, and if that's happening, then it's only going to be pushing the candlesticks down with it. Also, you can see here it was oversold. Now it's kind of in mid-range, so it's at a good level for the RSI. So it could consolidate for a little while. You'd want to see it trading between this range, between the 115 and 110. I'd say it's going to stay in this range for a while, but then you're going to see either it breaks below, because reality speaking, everybody's going to start working out outside, or they do impose another shutdown, like with this whole wave 3 happening. But then you could look for a run up. I'd say a retest of 120 if it does break above 115. But yeah, definitely keep an eye on. I'll keep an eye on this. I don't really see it having too much strength anymore. Yeah, even on the 6 hour chart is getting rejected off the 200 EMA. So with that, and you can see previous levels here, resistance, 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 resistance. It's got a lot of resistance around this level. So keep an eye on it. You'd want to see it trading between 110. You want to see it hold that level. If it does, then maybe a retracement to 115 for now, consolidate, see if a new catalyst comes up, but then a massive run would probably get it up to 120. I don't really see it getting any higher than that, at least for the short term. I'd probably say there is a little bit more downside to come because they will slow down their sales with the weather improving, except for if you're like way in the south, California, Miami. All right, so anyways, let's go on to the next one. RYCEY. All right, Rolls-Royce Holdings. Massive gap. This is, I would love to see this get filled. But let's look at the chart. Okay, so on the 4 hour chart, you know what? It's actually not a bad chart. I kind of like this. It's been consolidating around the 150 level. It finally broke above 150. It broke above the 20-day moving average. So you're going to look for some resistance over here at 160, which you do have the 50-day moving average as well. If it does break above, you'd want to see a retest. So let's zoom in a bit. Let's go to the 20-day. All right, so on the 20-day chart, you can see now there is a gap below. I'm not too sure if this will get filled, but it might. It's also based on volume, and this does not have the most amount of volume I've seen, especially for something that's low cap, or I'm not too sure what the float is. I'm going to have to do some research on this. But you can see it's getting beaten up at the 20-day. You want to see it hold above the, at the 200. You'd want to see it hold above that. Next level I'd look for is at 170, which you did see on the 4 hour chart. It did have the 200-day moving average right at the 170 level, so that's going to be a key level to look for. All right, so I'd look out for this. It could have a nice run. I do like the setup. It did break above the 20, did break above the 50, which now, of course, is just coming up to the 200. So you want to look for a nice run up to 170 before it faces some more consolidation, or at least some resistance. Once that happens, if it does pull back, you'd want it to stay above 160, 162, and then make another run to the upside. But this one would need some serious catalysts. Let's see if there was any news that released on this. Rolls-Royce hopes 5.6 billion 2020 loss leaves the worst behind. Not the best catalyst you'd look for, not the nicest news you would look for. But if you're just based on the charts, you would need some serious buyers to come in here and help push this up. And you can see it's almost at the, it's about to touch the overbought levels. So keep an eye out for this. This is going to be huge. So that 170, even 160, 165 is going to be a very strong level for it to break through. All right, so I'll keep an eye on this. But yeah, you can see here before, 164 was a heavy level right here. 164 was a heavy level of resistance for it to break through in the past. All right, so keep an eye on that. You'd want to see it break above that. If it can't, then you can expect some more downside, because that news catalyst is not the best. Tesla, everybody knows Tesla. Everybody follows Tesla. Even if you don't trade Tesla, you still want to watch it to see what it's doing, especially if you're heavy in the tech sector, because Tesla, along with Apple, they really do have a massive play or a massive impact on the NASDAQ. And a lot of times, I do follow NASDAQ. Obviously, I look for levels on the NASDAQ for support and resistance. But a lot of it is manipulated by Tesla. It's a very heavy holding in there. So let's see. It did play between the trading range. It broke through the first level. Okay, 615. I think this one should be 695. It broke through 695. It ripped through 695. Oh, no, wait. Here's 695. I don't know what I'm talking about. So either way, it came up and it rejected. So it didn't even touch 695. So this is going to be a massive level to look for. All right, let's zoom out here.
So we had support at 600. It broke through support a couple times, and then it came back up. But then again, you see here the pattern, 20 below to 50 below to 200, and whenever that happens, it's almost like a slingshot. So it does push it up. And then when it does start pushing up, you want to see that it does stay above those moving averages. And this one did. It had massive support on the 20. Even broke through to 200, which was at another level of resistance. So this was support at one point, became resistance, became support, became resistance, became resistance. So it finally broke through that 600 to 650 trading range. Now the next one, you want to see that it breaks above 695. All right, so 695 to 700 is going to be the next thing that we look for if it does break back above the 20-day moving average. So right now it came back below, and like I was stating in the other chart, you see how the 20-day is starting to kind of point down a bit. So that's not a good sign. Most likely Monday what's going to happen is it is going to try to push up. It may get rejected, depending on what happens pre-market. A lot of times pre-market, people will just, retail buyers, especially anybody that has Webull or Robinhood, you could trade this pre-market from 4 a.m. So that's why you'll see a lot of stocks just take off. But then once it comes to market hours, you'll see it pull back to realistic levels. So I wouldn't be surprised if it does gap up pre-market, but then you'd want to see that it holds support. If you're looking at the 20-day chart, the 20-day 1 hour chart, you want to see it hold support at the 20-day moving average. All right, if it does not hold that, then yeah, you can look for it to come back down, but I really don't see it breaking back down below the 650. I'd want to see an entry around 650 because it's already been established as a previous level of resistance, so you'd want to see it retest for support, because you see here it didn't actually retest 650. It retested the 200-day moving average. I'd want to see it actually come back and retest 650 before pushing up further. All right, so look for that. Look for a retest. I'd probably make my entry point over here if it does come back and use it as a level of support, and then you can see another push up to about 680 before seeing any kind of massive resistance. After that, you'd want to see it break up to that 695 level, and once it crosses through 700, look for the next level of resistance. Let's extend this to the right at 735. All right, there is a massive gap that still needs to be filled up above from 768 to 781, and I do see Tesla hitting those levels hopefully soon. All right, so I would definitely look for that entry at 650. I do believe it will pull back to 650. Tesla loves to play the gaps. As you can see here, there's one gap that still has yet to be filled, but there's so much support at the $600 level. I really don't see it coming back down to these levels anytime soon. So let's see if it does fill the gap. It did fill this gap. I'm pretty sure it will gap above, but it may come back to fill it. So look for an entry at 650 on Tesla on Monday. All right, let's look at Twitter. All right, Twitter, once again, same pattern. This was awesome. Double bottom too. So you've got a double bottom, a nice support at the 59.25 level, or 59.28 level. So I would look for that as a base. But it did bounce off of that. So you got the double bottom. You also got a little W in here, and it did break above that. So once, of course, it does cross the center, it's only going to have more room for the upside. It did hold the 50-day moving average for support. It's kind of iffy on the 20, getting rejected on the 200. So what I would look for come Monday, if it does open up on Monday morning above $64 and above the 20-day moving average, it may still get rejected by that 64. So you could look for a level of consolidation in here, but as long as it's making higher lows, which you can see that it is doing, it's been making higher lows. It's going up, consolidates, comes down, higher low. Goes up, consolidates, a little bit higher low. Goes up, consolidates, comes back. But either way, it's still making higher lows every time. So I do think Twitter has more room to run to the upside. Look for resistance at 65. 64.46. Alright, so I'd say 64.50. We'll just make it an easy number. 64.50 to make a solid case for a level of resistance. So you would want it to break above that, retest it for support before pushing up higher. And then the next level, which you can see here, has been resistance in the past and support in the past at 66.30, or we'll just say 66.25. That will be the next level of resistance, and you would want it to break above that, come back, test it for support before pushing up any higher. All right, let's look at it on a different chart though. Let's look at it on a 5-minute and see what's going on. All right, same thing. So it is kind of rounding here, but you've got the 20 below the 50 below the 2. So I do see it making another run back up, maybe till 65. So I'd look for that. I'd look for a nice play to 65 on Monday and just see what happens. Might get rejected, but as long as it consolidates between 65 and 64.50, that would be the levels to watch on that. All right, let's look at Viacom. Everybody knows this, along with Discovery. They just tanked. What a beautiful short play this would have been had I known this was going to happen. But either way, it's been holding support on the 200-day really, really good. But you do have the 20-day coming down, pinching on the 50. If the 20-day does cross below, then on Monday you will see another push down. I would look for support at the next realistic level would be 40. So I could see it making a drop down till 40, or at least I'd say 40. Let's just say between 40 and 41. Look for an entry point there. You want it to hold 40. If it can hold 40, it will consolidate for a while before making some new moves up. There is a pretty big gap up here between 89.94. Let's just get the exact number. 90.30 and 85. So you want that to get filled. 85 to 90.30. Nice little gap in there. But it's going to be some time before it actually comes up there. And you've got a lot of other levels to look for too. So you've got 50. You've got all the solid numbers, all the psychological numbers I would definitely be looking for in this play. Everything that's based on 5s is what I would go for on this. And then, of course, you'd look for resistance, heavy resistance. But by that time, I mean, this 50-day would be pushed down a lot further. Let's look at a 20-day chart. Well, you know what? You got the 20 below the 50 here. It is consolidating, which is great. So you don't want to see it drop below 43, below 44. So come Monday morning, you'd want to see it holding 44. If it's holding 44, then you can see a nice little pop above the 20-day and the 50-day moving averages, and look for some heavy resistance at 50. I mean, this is going to be a massive area of resistance. So expect the trading range between 44 and 50 for the next short term. After that, you can see another push to the upside. I'd say 58 would be the next level of resistance to the upside after it breaks through 50. So a nice little trading range between 56.63 and 58.13. And by that time, I'm pretty sure the 200-day moving average will be at that level as well. All right, so keep an eye out on that. I'll keep an eye out on this too. Let's see what we got over here. You know what? I'd love to. Actually, no, I wouldn't be able to do that. That's a pretty odd request. But thank you. Let's see. So we went through all those tickers. Let me see if we can get some more tickers in here. CCIV, okay, we got that taken care of. Anyways, so all right, so those are basic levels. for me, what I'm going to be focusing on mostly next week is watching Tesla, Apple, and I'm also going to start looking more into cryptocurrencies. That one has been that one has been playing really well, so I do want to start taking part in crypto. But for those of you guys that are watching, thank you. Let me know how this went. If you haven't already subscribed, please do so. Join the team. And if you guys like anything in this video, go ahead and hit the like button. Let me know. If there's more content, just leave a comment in the comment section down below. And if there's other tickers that you guys would prefer that I would pull, then I can go ahead and do that for the next time. But if you guys like it, let me know, and maybe I can do this every weekend where I'll do a live stream. I'm just going to figure out how to work this out a little better since this is my first time doing a live stream. But yeah, hope to see you guys in the next one. Stay green.